Ladies and gentlemen, good evening, and thank you for joining us at this conference organized by BCGE, Banque Cantonale de Genève, with the support of the French Chamber in Hong Kong, who is supporting this event very kindly. My name is Nicolette de Jonquer. I'm the chief editor for Allnews.ch, an online media dedicated to finance in Switzerland. The conference today will focus on investing in the real estate in Switzerland and in France. First, a few words about the program, which you should have all received. Yves Perry, a member of the executive board of BCGE, will introduce the conference. His introduction will be followed by some key insights by Bruce Crochat, who's head of institutional portfolio management at BCGE. He will cover why one should invest in Switzerland. Christophe Ablitzel will then take the floor. Christophe is the head of private banking in Switzerland, and he will present opportunities in the Swiss real estate market. Last but not least, Karine Albert, head of French private clients, will explain the benefits of the expertise of a Swiss bank to invest in the French real estate market. The presentations will be followed by 20 minutes Q&A, and we hope that we'll receive many, many questions from the floor. We also hope that we'll be able to answer them all. Please do not hesitate to ask questions via the platform. I will receive them here on my iPad, and I will share them with the panelists. Now, without further ado, let me introduce Mr. Sperry.
Ladies and gentlemen, dear guests, hello everyone from Switzerland. On behalf of Banque Cantonale de Genève and our representative office in Hong Kong, we warmly thank you for participating in this webinar, and we're very happy to have you with us today. Banque Cantonale de Genève has been based for more than 200 years in Geneva, a truly international city. Likewise, our institution is resolutely turned towards the world with our network of offices in Switzerland, France, Dubai, and Hong Kong, and also through the scope of services that we offer to our customers. We are committed to serving our customers wherever they may be and to provide them with Swiss quality services that are tailored to their needs. BCG is therefore one of the few banks in Geneva that is able to provide personalized access to the financial markets. As a member of the SIX Swiss Exchange, we offer global wealth management solutions based on a proven and solid investment philosophy, and we also provide financial support for your real estate projects in Switzerland and France. Today, we have the pleasure to discuss these three topics with experts. Thank you very much for your attention and enjoy this event.
Mr. Sperry, thank you very much. We will now move to Mr. Crochat, who will cover the topic of why one should invest in Switzerland, as if it weren't obvious.
Thank you very much, and welcome all to this webinar. So in the next 10 minutes or so, I will try to convince you indeed to invest in Switzerland. And let me start with the key messages you should remember from this presentation. There are 6 key messages. The first one is stability. You will see that investing in Switzerland means investing in a very stable macroeconomic framework. The second one is competitiveness. We are one of the most competitive countries in the world, meaning that we innovate a lot. I think this is key to the investment case for Switzerland. You will see, or you may know, that we have a very strong currency, and as foreigner, you will benefit from investing in a strong currency. And last but not least, you will see that our stock market is very performing with a low level of risk, and by risk I mean volatility here. So you will see that there is a very attractive risk-return profile for this market. But let me start with the stable system and the competitive economy that Switzerland offers. As you can see on this chart, which is coming from the World Economic Forum Competitiveness Report, Switzerland is one of the strongest countries in terms of macroeconomic stability. This is due, in our view, to three pillars. The first one is the political stability that Switzerland offers, with one of the strongest direct democracy in the world and a very decentralized power. The second pillar is the economic stability that the country offers, with sustainable growth based on very strong human capital, as you can see also on this chart, strong infrastructure and innovation, of course. The country, the companies and the government has a low level of debt, meaning that we consider this growth as sustainable and of high quality. And last but not least, we enjoy a financial stability in the country. We are one of the very few left AAA-rated government in terms of sovereign debt. And we've been so since 1989, so it's not new. You will see later on that we have a strong currency and we have one of the most efficient banking systems in the world. So innovation, as I said before, is key to the investment case for this country. As you can see here, 3.4% of the GDP is invested in research and development in Switzerland. This is much more than the OECD average of 2.4%. It's more than the US, it's more than Europe, it's more than China. It's the highest ratio that you can find on Earth. So we are a very innovative country. You can say that by this other statistic. We are the undisputed leader in patent application, meaning that each year, or last year at least, but it's a growing trend, 988 patents per million inhabitants were done in Switzerland. This is almost more than three times more than Germany, way above USA and China. So I think this underlines again the innovating power of the country. And last but not least, two universities are on a regular basis on the world top 20 universities, with the EPFL in Lausanne and ETH in Zurich. On the currency, as you can see here, there has been a very positive trend of appreciation of the Swiss francs against the dollar. You can see that since 2000, on average, each year, the currency appreciated by 2.8%. So that's really strong appreciation of the currency. This is true for the US dollar, but this is also true for all other major currencies. So as a foreigner investing in Switzerland, you will benefit from this currency appreciation. And we think that there is three main reasons behind the safe haven status and the appreciation of the currency, being a budget surplus. So we earn more, the country earns more than it spends. So it's quite a unique feature in these days. Of course, last year, due to the pandemic, it wasn't the case, but on a regular basis, it is. Then current account surplus since the 80s, so we export more than we import. And finally, high annual saving rate with more than 10% that is saved each year. So all that money, that wealth, that stay in the country. Then let's move to the stock market, because I think this is often not well known. We have a very sizable and international stock market, as you can see on this chart. So the total market cap of Switzerland is around 1.9 trillion US dollar. This is more or less 2.5 times bigger than Italy, despite being a smaller country. This is roughly just a bit less than the total market cap of Germany. So you can see that the country, despite being small in size, have a sizable stock market. Of course, it is way smaller than the US, 34 trillion market cap. And just to give you an idea, Switzerland would be just above the market cap of Microsoft, 1.8 trillion, but still below Apple with 2.1 trillion. More interestingly, I think it's a very international stock market. If you look at this ratio, market cap to GDP, the highest is for Switzerland with 2.3 times, way above USA, Germany, China. I think here underlying again the very internationally oriented stock market. It is a stock market with a certain size, and as you can see on this chart, and sorry for not seeing the label of the lines, but the most performing stock market over the last 20 years in US dollar has been Switzerland. So this is the blue line that you can see here, with an average annual growth of 7.5%. This is more than the US. This is the light gray line that you can see just below, with 6.4%, if I remember correctly, per year. And the gray line, the dark gray line, is Europe, with only 4.5% average annual growth over the last 20 years. So Switzerland outperformed the US in US dollar over this long-term period. I think another way of summarizing it all in terms of investing in our stock market is this chart. It tells it everything. I think the very strong performance, you can see that on the horizontal axis, so the total return CAGR, so it's an average annual growth of the stock market over the last 10 years this time, so it's a shorter term period, but it works on 20, 5, 3, any time period you might consider. Switzerland is always the lowest volatile market and second best in terms of performance, just after the US. So remember that from investing in Switzerland, you invest in a very performing market with a low volatility. Sorry for that. You can see that also when there is a stock market crisis. So here I've summarized all the recent stock market crises that we've experienced. And Switzerland always outperformed Europe in terms of downside. So it was less down than the other market in Europe. And most of the time, it also outperformed the US and the MSCI World. The only time it wasn't the case was during the European debt crisis. But you can see, even during the last crisis we saw last year, so the COVID-19 pandemic, we've outperformed, I think, which is the reason behind that is that our companies are very resilient and of high quality, as you will see in the next slide. So I wanted to conclude this presentation by explaining a bit what are the key characteristics of a Swiss listed companies, but it also applies to not listed companies. I think in Switzerland we're the base for a lot of global leaders in their market. So here you can see some well-known and less-known names. Nestlé, the biggest food company in the world. Lonza, which is a company that we like a lot. The biggest CDMO company in the world. So it's an abbreviation meaning that they're subcontracting company for pharma industry that produce the molecules. They're the biggest in the world and the best. You have Givaudan, the world leader in fragrance and flavors. Richemont leading the jewelry with Cartier and Van Cleef. You also have Sika, Sonova, Straumann. I could talk a lot about those companies, but I think it's not the topic today. So let me just summarize. A global leader in their market with, again, a major shareholder. The average free float for the market is 2/3, meaning that 1/3 is still held by a strategic shareholder. High investment in R&D. So this was the case for the country, 3.4%, as I said before. If you look only at the listed company, it's double that amount with an average R&D spending of 7% of sales. Very strong balance sheet, so we have low level of debt into our companies and vast majority of sales abroad. So I hope I've convinced you that you should invest in Switzerland. If not, I'm sure my two next colleagues will do so. And I'll be there for the Q&A at the end. Thank you very much for your attention.
Thank you, Mr. Crochat. Now it's Mr. Christopher Bitzler-Roth's turn to take the floor with real estate in Switzerland.
Thank you, Nicole. Thank you, Bruce, for the interesting input. Now we are going, during the next 10 minutes, we are going to talk about the real estate market as an opportunity for direct investment. You will see I have split my presentation in two parts. The first part will cover the general market and the legal context, and in the second part, the way mortgage work in Switzerland, the role of the bank, and the financial needs you would be facing. Now, when I will be talking about the legal context, you will see that the situation varies according to the citizenship and the country of residence of the buyer. But don't worry, I think we'll have answer to all your questions, independently of the fact whether you are Swiss or not, you are planning to move to Switzerland, or you will continue to live abroad. In any case, the real estate market in Switzerland is interesting and promising. In fact, it offers very nice investment opportunities, and thanks to the current low interest environment, it offers also attractive borrowing conditions. But there's a but. Prices are high, and as you see on the bottom part of the chart, there has been a short decline in 2017, but the prices are going up again. In addition, in such situation, the supply is very limited. The two graphs below show the price of real estate over a period of 10 years. And as you see, the three segments, the upper, the middle, and the simple segment are impacted by the increase. There are obviously differences between the areas, between the cantons. The closer you come to the main economic centers of Zurich, of Basel, Zug, Lausanne, Geneva, or the closer you are to the Lake of Geneva and to the spots in the Alps, the higher the prices are. But the trends are the same everywhere. What is interesting to know is that the home ownership in Switzerland is quite low. It's probably one of the lowest in the world. Only 1/3 of the population in Switzerland lives in own properties. This has obviously an impact because the other part is controlled by institutional investors. I looked in the list of the people today who are attending this conference. I think there are some people in Asia who may be interested as well to this type of activity. Second point, what about foreigners in Switzerland? Same thing, the home ownership is quite low, but it is very high for second home and for holiday properties. With that, we go to the next point, which is the restriction we have to take into consideration when buying a property in Switzerland. I have chosen to talk about two sets of law today. The first is the Lex Kohler. It was introduced in 1961 and was meant to restrict, to a certain extent, the purchase of real estate by foreigners. And the second one is the Lex Kohler, voted in 2012, which restricts the construction of new second homes in places that have already more than 20% of accommodation as holiday homes. Let's have a closer look in the Lex Kohler, which is highlighted in the upper right corner of the slide. The legal frame distinguishes between the type of real estate investment, so single-family homes or condominium, multifamily or industrial premises and commercial properties, and on the other side, the citizenship and the residence of the investor. This piece of law does not concern Swiss citizens. But for non-Swiss citizens, you can say there are basically two groups of property you can directly invest in, independently of your citizenship and of your current place of residence. These are holiday properties and industrial premises as well as commercial properties. Then the text of law distinguishes between EU and EFTA citizen and non-EU and non-EFTA citizen. If you want to buy a property and plan to use it as your primary residence, your citizenship is not relevant, but obviously you have to be in Switzerland and you have to have a settlement permit. In case you are treated exactly as if the same way as if you were a Swiss citizen. In case of EU or EFTA citizen, you can also invest in a secondary residence. If you are non-EU or non-EFTA citizen without settlement permit, then you are invited to focus on holiday homes and on commercial premises, industrial premises. So what is open to you are production buildings, warehouses, offices, shopping centers, retail stores, hotels, restaurants, but also medical offices. You can buy a medical clinic. One way is to do it directly, and the other way is to do it indirectly via funds or other institutional financial means. Next point that I wanted to point out was the lex color, because this one applies to everyone. And as I mentioned, it was voted 2012 in order to restrict the construction of new second homes in places that have already more than 20% of accommodation in holiday homes. It entered in force in 2013, and the impact has been total. So we can basically say that no new building permit have been granted in almost all the ski resorts that had already passed the 20% limit. I have chosen this card, which is an official one, and you will see on the map the blue area. These are basically all the area where you can go for ski holidays. So what does it mean? It means that purchase of holiday properties in ski resort is de facto restricted to existing building. It has an impact on the supply and on the price of the property. It does not mean that you can't find anything, but it may take longer and cost significantly more than you expected. Respectively, a point that I need to highlight, the purchase price may exceed the value that a bank is prepared to finance. In any case, there are properties on the market. As in any other country, you find them online through estate agent and property portals such as HomeGate, Imo Street, Imo Scout. You can also go and get in touch with a real estate agency. They are all organized in the Swiss Real Estate Association. Once you have found something, you have found your dream, you can contact our representative office in Hong Kong. The team in Hong Kong will then coordinate the activity with us. Here in Switzerland, you see it on the slide. We have teams of real estate specialists in Geneva, in Lausanne, in Zurich and Basel, and we cover almost the entire country. You, as a client, will be put in touch with a specialist, and this specialist will follow you or advise you during the entire process. He will coordinate the different tasks. He will issue the credit agreement. He will make sure that the mortgage is paid out. The bank, on its side, will issue a note as a security for the mortgage. The role of the bank is key in this process. We act as your partner. An important point is that we assess the value of the property based on the market figures, and this independently of the market documentation you may have received. This means that there may be some difference between the ask price and the valuation we make. We then review your financial potential. We work on different options that you have for a mortgage. We coordinate the entire process with the notary. At the end, our goal is to optimize your overall financial situation in conjunction with your mortgage, be it pension, life insurance, investment solutions. For those who are not very familiar with the Swiss model of mortgage, let's spend a few minutes to understand how it works. As a buyer, you have to pay a minimum of 20% of the value of the property yourself. This is marked on this slide under equity 20%. As I mentioned before, the value of the property is defined by the bank. And out of this 20%, 10% at least must be paid in cash. If you move to Switzerland and invest in a primary residence, you may use part of your pension fund to finance as also part of this equity. But this works only for primary residence. You remember that in 2017, the price of the real estate went down a little bit before recovering. The reason was at this time that the equity amount was increased from 15 to 20% by the regulator, which had an impact on the demand at that time, and you saw that the demand recovered very quickly thereafter. So 20% have to be brought by you. So it means that the mortgage can be done by a bank up to 80%. We distinguish, and you see it there, between a first mortgage and a second mortgage. The first mortgage goes up to 2/3 of the value of the property, and which is something which is quite special for Switzerland, does not have to be repaid. It is a main difference with France, for example. The second mortgage, which is marked that with 13%, covers the gap between the 2/3 of the maximum and the maximum of 80%, and this one has to be repaid within 15 years or at latest at the retirement age of the buyer. As a bank, you see it on the right side of the slide, we provide a variety of mortgage loans from fixed rate mortgage up to 15 years, these for amount over 100,000, variable rate mortgage, SARON rate mortgage, the ex-LIBOR or the new LIBOR rate. We have also some specialty like Minergie and construction loans, however, for construction loans only in Geneva. The mortgage rate varies depending on the duration. The longer the duration, the higher the rate is. Now, prior to hand over to the next speaker, let's look at a calculation based on a property value of 1 million. So depending on your financial situation and your goals, I have two options here on my slide. The first one is a mortgage of 66%. It means that you can cover everything yourself, or you have sufficient cash and you have only the first mortgage. And the second is a mortgage up to 80%, so a combination with the first and the second mortgage. So let's take the 66% mortgage. It means that you bring 33% yourself. The deposit of 20% becomes a deposit of 33%, so 334K. The mortgage is then this 2/3 of the value. The cost of interest are calculated to be 33,000, and you see that it is done on a theoretical rate of 5%. This is not the real amount you would pay, but we are required by law to use this amount as a stress test to make sure that when the interest rate increase, you are not in a difficult situation. As I mentioned before, there is no repayment of the loan, so 0 franc, but we have to add a 1% charge for shared services, maintenance costs, etc. This brings us to a total cost of 43,000, and you see on the last row, I say, for this amount, you need a minimum income of 130K, which is 3 times the cost of the mortgage. Here again, it's a legal requirement. So let's go to the second mortgage. So you will see it's the same mechanism. We have a value of the property of 1 million. We bring in 20%, so 200,000, and the mortgage is then 800. We apply again this 5%, 40,000. Then on the part, on the third that you have to repay, we have a repayment of 8,000, and we have again the 1% for the charges. In this case, obviously, you have a higher mortgage, you have higher annual costs, and you need a higher income to cover these costs. In both cases, and I mentioned it before, what you have to keep in mind is that the mortgage is always based on the value of the property assessed by the lender, so by the bank. Depending on the market situation, the value can differ from the price which is asked by the seller. This amount is not covered by the mortgage and has to be paid in cash or with liquidity. So I think it's quite complex, but if you have questions, please don't hesitate to contact us in the bank. Now, before I move on and I pass the floor to the next speaker, I have just added this slide. When you get the presentation, it shows the difference. It's a comparison of the tax situation in the various cantons. And this may be also an important factor that you want to take into consideration when investing in Switzerland.
Mr. Blitzel, thank you very much. It is now Mrs. Albert's time to take the floor and to explain how important the expertise of a Swiss bank can be in investing in the French real estate market. Mrs. Albert?
Thank you. As previously seen with my colleague Christophe here, Banque Cantonale offers a great expertise in mortgages in Switzerland. But what you might not know yet is it's not only Switzerland. We rely on our know-how to support you in the financing of your real estate in France too. Banque Cantonale de Genève has a real center of expertise in France. There's a team of 7 people based in Geneva, all previously employed in the French banking sector. This team is responsible for loans in France with the necessary expertise to fulfill all your projects. My name is Karine. I'm head of French private clients and a member of the team. We also rely on Banque Cantonale de Genève France, which is our French subsidiary based in Lyon, Annecy, and Paris. The team there is specialized in providing assistance for commercial as well as professional projects, such as real estate developers, for example. Our goal is to offer Swiss and international clients competitive private real estate loans. If you are planning to buy a new property for primary residency, vacation home, or if you're planning to invest in real estate, we can meet your expectation by offering simple and advantageous mortgages solution. We can finance your project if you buy the property through a real estate company, such as a French Société Civile Immobilière, or if you buy directly the property in your name. In order to achieve this, we propose various banking services. First of all, loan for new purchases. You are maybe already looking forward to buying your dream home in France. For example, a nice chalet in Megève or a charming apartment in Paris, a family house close to Geneva in neighboring France. We can accompany you all the way, and it will be a pleasure to help you financing your project in France with a tailor-made solution everywhere in France except Corsica and overseas territories. A portion of the purchase price of your dream home must be financed with your own funds. Just like Swiss financing real estate, you must finance from your own resources at least 20% of the real estate value as determined by the bank. Just as we do for Switzerland, we will assess the property value. From your own fund, also keep in mind that you will have to pay additional costs, such as deed fees. The cost is usually between 7 to 8% of the property's price, which is one of the highest costs in the European Union. Added to that, security fees must also be paid to your notary, and the cost is around 1.2–1.3% of the mortgage. Well, altogether, remember, as an easy reminder, you need to pay roughly 10% of the purchase price from your own saving also. Well, the fees being paid, and after the 20% down payment, the other portion of the purchase price may then be financed with a bank loan that's secured by the real estate. It is possible for you to cover 80% maximum of the property's value with the mortgage. Our mortgage offer is available in Swiss francs and in euros. While best choices regarding currency might be one of your concerns, it is often one of my customers' questions. If your incomes are in foreign currencies besides Swiss francs, US dollars, Hong Kong dollars, euros, our financing solutions will then be in euros. If you earn Swiss francs, you will have the choice between Swiss francs and euros. If your income are in Swiss francs, no matter what your choice is, you will be taking a currency risk. If there is a chance that you sell the property before the mortgage is paid off, then favor euros to lower your risk. Indeed, if you need to sell the property, you will be paying off the Swiss francs mortgage with the proceeds from the real estate sale, which is in euros. And it's very hard to tell what will the debt in Swiss francs represent to euros by then. The more likely you are to keep the property for a long time, the more likely you should finance your bought in Swiss francs, your income currency. If you do not have to sell the property before the mortgage is paid off, then there is no further exchange risk. Regarding interest rate now, just like our mortgages for Switzerland, you will have the choice between fixed-term interest rates for 2 to 15 years or variable rates. Whenever possible, we recommend combining different mortgage products and mortgage terms. In this way, you can better distribute the risk. With a fixed-rate mortgage, the interest rates stay constant for the full term. This makes it easier for you to plan and provide you with stability for your property budget. In the case of Saron or Euribor mortgage, you accept interest volatility. The main advantage to variable rate is the great flexibility to pay off the loan early without any penalty. You can also react very quickly to rise interest by simply asking us to transform Saron or Euribor rate into a fixed term rate. We can also refinance existing loans. You may already own your property. We can assist you in refinancing your property by taking over the existing loan. The procedure is the same as for a new purchase. We meet with you to understand your project and your goals. We gather documents to understand and assess the financial potential. We assess the value of the property, and we finally offer a tailor-made solution that suits your need. You will need to meet the same requirements, so maximum loan-to-value ratio of 80%. To give you an example, Banque Cantonale has recently agreed with taking over an existing loan against a luxurious apartment in south of France and increased it up to first mortgage to provide the owner with cash that he could spend to do some renovation work. Finally, provision of cash to finance all your life projects. We provide you with liquidity by raising funds on your real estate in France. This offer is slightly more restrictive. You will have a maximum loan-to-value ratio, in that case of 65%, instead of the 80% seen before. But beside this particular point, it is the same mortgage offer. You borrow money against your real estate, and after our guarantee is duly registered with the mortgage, we make the funds available to you on your BCG private account. To give you an example, we refinance a holiday residency in France up to 50% of its value to allow one of our clients to have enough cash to buy back shares of his company. And we do often refinance real estate in France to provide our customers, soon to be homeowner in Switzerland, with sufficient own fund. The main difference of our offer between Switzerland and France is amortization. Unlike our mortgages for real estate in Switzerland, for all mortgages against real estate in France, both new purchase or refinancing existing debt, the whole capital borrowed must be repaid after a predetermined period of time. We finance our customer based on fixed capital repayment and quarterly basis. Usually, the mortgage is paid after 20 to 25 years maximum. For example, if you borrow 500,000 Swiss francs over 25 years, your capital repayment will be 5,000 Swiss francs per quarter during 25 years. To sum up, I'd like you to remember that we have at heart to give you the best advice, having you benefit from our thorough knowledge of the French market. We guide you all the way of the process and also in your relationship with your French notary. All decisions are made in Geneva, which guarantee a good speed in decision-making and information exchange. We try to make things easy for you. Signature and handover of contractual documents are facilitated with our Hong Kong office. We do understand the specificities of the expatriate situation and offer tailor-made financing solution that meets your specific needs. We can finance you if you buy the property through a real estate company, such as Société Civile Immobilière, or if you directly buy the property in your name. Well, I'm coming at the end of my presentation. So if you wish to buy a property in mainland France, if you wish to take over an existing loan or to raise some cash on an existing property, we will be happy to discuss and support your project. So feel free to contact us at Banque Cantonale de Genève. Thank you.
Mrs. Albert, thank you very much. Now, I would like to thank our panelists for their really very insightful presentations. I would like to thank the audience for its presence today and for the very numerous questions. Thank you so much. It was a real pleasure to moderate this event. Some closing remarks quickly. Presentations will be made available to the participants. And could I ask the audience to kindly complete the satisfaction survey displayed at the top of your screen. And I'm only left to wish you a lovely evening and a very nice end of the week. Thank you very much for attending.